Well, I guess it's been a while. We're going to go over the 17th of April 2026 NQ price action. Specifically, it's about aggressive buy program to take out the autumn high. So I've been away from the markets for like a while, ever since this consolidation was starting to manifest. I just abandoned it because it was just not interesting and I had other things I could focus on instead of the markets because it wasn't fruitful. However, since about late March, and I was getting back into the markets and eventually it cleaned up, especially in April, as we've seen with this extremely aggressive run higher, which was pretty neat and much cleaner to trade if you compare the price action on the left side here with this consolidation back and forth, long wicks on both sides of the candle, pretty indicative of a consolidation day or just a range bound or a more indecisive day. Um, we've seen a lot of those small candles like that, and overall the price action was pretty wicked. You could say it was not that clean. Things could still pan out like you expected it to, but it was in a manner that is not really ideal. A much back and forth movement and just a lot more. Well, you could you probably would experience more stress if you trade in that environment, and it's just not something I would prefer to do. And it's also just you can just sit on your hands if you at least if you can sit on your hands, then you shouldn't even be in trading, to be honest. But back to the present and the relevant things here. So the market reversed from a higher time frame PDRA and set up this market maker buy model, very obvious urgent consolidation. You saw the movement higher. Obviously, also with the geopolitical stuff, it probably had an impact on the market. In the sense of it was a whole lot more. How could you say it? A whole lot more. What's the right word? Uncertain. It was a lot of uncertainty in the market, and that's what was reflected in price. But we had this very aggressive movement higher with only closed candles, except for this small one, and especially from here on when we had that expansion higher, when these consecutive downclose candles formed the order block once price moved above the opening price of these downclose candles. It was like a sealed deal for me, at least, if you're going to aggressively target the autumn high. And the reason for why it would be aggressive is just that's just a very typical characteristic that you see. The market is not going to, the algorithm is not going to slowly move higher when there's that much liquidity above these highs, for example, and especially here, it's going to be in a rapid movement. Just take out everyone that was selling short on the way down, expecting the market to further decline. As it initially did here, but obviously nothing compared to the way it moved higher here. So I was pretty much on board once price moves above this opening price. We had then this order block formed and this a previous area of distribution, which could potentially act as a which you would expect to act as a discount rate, which it did here. Price dropped down into the opening price of these downclose candles order block and repels aggressively higher. You don't expect it to meander around here, consolidate. No, you want to see that aggressive movement higher, which we did here. And then from there on, especially from there on, it was just very simple trading. We had this fair value gap formed of, at least once you identify, once you see, you could have first traded this day. But if you didn't and the market closed here, then you would expect a fair value gap to form. So typically you would look for the next candle to not be that large, and then which was the case, and then eventually the market to drop down back into that fair value gap, and that's like an obvious long. You had this fair value gap, you would expect the institutional order flow entry drill. So it's been so long that I used this lingo, but we're getting into it. into this fair value gap, and especially when we have that confluence of convergence of arrays. So we have this breaker block here, which you classify as a breaker block, a mitigation block. It's not really that relevant. It's just the previous area of distribution. So we have that converging with this fair value gap. So any drop down into that should be short-lived, and you want to see a quick expansion higher, a sharp rejection, targeting the relative equal highs here. Very low resistance liquidity, run a signature highs. So you would look for the market to expand higher. So what would that mean intraday? Because I focus solely on intraday trading, because it takes so little time to harvest the same results, potentially the same results as you would on the higher time frame. You could be done in like a 30 minutes, 1 hour window, and especially if you trade on the 1 minute and 15 seconds, 30 seconds, it doesn't take a whole lot of time. But obviously intraday, I would on these days, what was that accent? On these days, you don't want to you don't want to be out too quick. And personally, I don't have. I'm okay with taking several trades then intraday, even if one fails. For example, I don't worry, because the buyer's on the higher time frame and everything is pretty much aligned then. So what I then usually do is just start to nail down an entry and then just ride for the entirety of the day, targeting the higher time frame target. So I will go into it. I will not go over any trades, but I should have recorded that. But like I said, I've been so dialed out of the market ever since here. So that was quite since November really. So I wasn't too attentive with journaling. I shouldn't curse with journaling and stuff. But that's definitely what I should be. Get back into. But I did obviously traded these last couple of weeks. I lost my train of thought, but nonetheless. So what I would usually do is then enter on the lower time frame, like a 1 minute chart, and then just try to ride it throughout the day, just targeting the higher time frame targets on the daily and the 4 hour. But considering given the structure here, I did target the higher time frame targets here. So even if I would get stopped out, I would just re-enter on a logical basis and try to target those same areas. So you would indeed look for the higher R targets, but that's just the opportunity that's giving to you. So it's obviously not typical when you have such an obvious run higher, but when there is, you should capitalize on it. So the 4 hour chart we have actually here. I didn't check, but potentially SMT divergence. I should look into it. If yes, nonetheless, you have a sell side right here, and then into this fair value gap, we set up the run higher. And then we have here, recently we had this drop back down into this hourly fair value gap. Notice how the bodies are respecting the midpoint of it. That's pretty much what you're looking for. Also, you might have been inclined to think, oh, especially if you were recent into this, you would think, oh, relative equal lows, that should be targeted. Look how obvious, look how clean. Now that's obviously false. You have to really refer to the higher time frame, because that's really what's going to tell you the narrative behind it. You shouldn't trade on the basis of patterns, because that's pretty gambling, really, is what it is. No, why do these lows stay intact? Because the higher time frame is just targeting that all-time high and all the base liquidity above, and you would expect it, like I reasoned, that you want to see it in a very fast manner and aggressive manner. So it would not be that if it would go for these lows again and then trade higher and then go for lows again. No, it's just going to leave those lows intact. And afterwards, after it has taken its buy-side liquidity targets, then we could see, for example, a decline lower eventually to take out those lows. But you don't want to really fight the stream like a salmon. That's pretty dangerous to do so, and also pretty unnecessary. What I did is just stick to the buy side and just avoid the shorts. Even if it was enticing to do so, I knew I would probably get punished if I tried to do it. And even if I did, I would really be very, I have to be very, very nimble with with my targeting, and it's just pretty uncomfortable because you know when you have like some experience, you know that it's probably wrong what you're doing. You can you notice that the movement higher is much cleaner because obviously in hindsight you can't really see how the candles form, but in real time you can see it, and the difference in the down close candles or the movement lower is very different from that movement higher. That's kind of okay. But we dropped down into this gap and then moved higher. You would expect any measure of discount rate to immediately provide support going higher and aggressive movement away from it, and also it to be very minute. So you would really look for that institutional order flow entry drills, those partial drops down into the discount array and then movement higher. You would not expect deep retracements, hence why you would expect this to remain open and unfilled, which is what it did. It didn't even reach a midpoint, so you would not look for any deep retracements. And even here, when we had some measure of retracement, you notice the wick from this candle only drops down into this balanced price range defined by this this candle's low, this candle's high, and this candle's if you would extend this out in time, you get a balanced price range because you have the overlap of this sell side imbalance, buy side inefficiency, and this buy side imbalance, sell side inefficiency, and then the movement higher. You have here another sell side rate, and then an aggressive movement higher to take out these relative equal highs. But for today, we moved higher, dropped down into this gap, like I said, and then took out the all-time high, which was my target. Today, it is noted though, it's much. It was much easier to trade the movement towards the all-time high instead of targeting the all-time high, because sometimes what we see here too is that it consolidates right in front of that all-time high, and it could have very well retraced a little bit further. Getting to spook out probably traders of their positions. So hourly chart, we see it's a 4-hour chart, by the way. Hourly chart, we see a little bit more detail, the respect of this busy, and how the drop was minute, body staying above the gap, and then only wicks dropping down into it. Movement higher, drop down into this order block. You get some overnight consolidation, obviously, and then eventually the move higher to take out the all-time high. I know it's also this new wick opening gap here we opened lower and then immediately filled it and continued to run higher. This was the most ideal characteristic because, for example, if it would open higher, then you would expect it to drop down again, and this is just so much cleaner in that sense because it was just a one-way street higher from here. So this is a 50-minute chart. I do everything on the spot, and since it's been such a while that I did this, because I've mostly just been focusing on my studies, but let's see. Okay, we have this, the opening price at midnight, extended out in time. We can see some measure of consolidation around that opening price until like about 3 a.m. The Frankfurt opening, I guess that is, yeah. Then the movement higher. If this breaker here that was of my interest, it was consolidating inside of it, and then once price trade above it, it was basically formed. Then what would you expect then? Obviously, you can trade within the breaker, expecting it to form. So if there was any PD array here on the lower time frame, you could potentially frame a trade. But I personally am mostly interested in the AM session because of mostly scheduling, to be honest. But also, it's, in my opinion, the nicest session to trade for index futures. So we have that drop down into this breaker. I surely hope that I'm recording, by the way. I didn't check it, but I assume I did. Price drop down into this breaker, find support. Notice how it was, again, very minute. You get this overlap with this fair value gap. You could potentially frame something there, then movement higher. Also, manipulation, you would expect it to be not overextended, so a small drop below it and then immediate movement higher. Nothing crazy, like a several point drop down and then a movement higher. No, you would expect to be very minimal, and then the movement higher, what you see here, drop down, and then you would expect a a quick expansion higher, which we see here. Again, discount arrays should provide immediate support, especially when time of day is realigned. I was trading here the long, and then targeting a measure of buy-side liquidity above. I was actually trading EVE also. I didn't even trade on my XFA is what you would say in English. Yeah, those accounts not. I was doing that in the AM session, but targeting just, well, in that case, since I was trading EVAs, I would just target until the max profit was hit, which was around here. Then the movement higher, then it dropped down at, notice after the 8:30 opening price, we see price drop down into this fair value gap. This is the Judas swing for the AM session. Then the quick expansion higher to take out the all-time high, and then that objective was met. Now, what would you then expect? Immediate reversal, not particularly, not outright. You would expect some measure of retracement, back it down into this large fair value gap, which we see. But then what is pretty typical is that you see several measures of offset distribution. So you see the market create a short-term high. I'm actually wanted to talk about this on the next frame, but we are going to do it here. Well, no, I will do it on the next actually. But price drops down into this midpoint of this wick, inverse premium wick. So it was overtaken here. Price drops down. We have this larger value gap, but where would your eyes go to this wick? Well, several points. Firstly, the midpoint, and then this wick. If you want to see, if you would see a deeper retracement, then my eyes would immediately go to this wick, the midpoint of it. Since it was pretty long, and that's really where my eyes then go to. If it was very short, then I wouldn't even consider it, but since it was long, that would be a point of interest. So the market dropped down to this, notice the respect of it, then the market repels higher, takes out this buy-side liquidity pool. Again, that's the offset distribution. And then does it again, and 3 drives pattern through, price drops down to the rejection block, and we see some consolidation into the close. We had nothing significant of news except for this, but that's pretty much neglectable. So the 5-minute time frame, we see here SMT at the lows with VS, and other characteristics that you want to see is a divergence at the lows in this case when price drops down into a discount array. When bullish, you want to see that SMT ideally, because that would further would be a confluence to your trade, and further give you I'm not coming on either word, but it will be supportive of your idea. It will be more supportive of your idea. Yeah, like that. So then the market moves higher. We see this convergence of this inversion for value gap and the rejection block here, which set up that last moved higher back to equilibrium, which is where it will consolidate into close. Here we see it on the buy side still, it being respected. The midpoint specifically is what I'm looking at. These wicks, I account for that, since still it's much cleaner now, but you still see some little movements below discount arrays, which is fine, I guess, because it's much better already. We see here several measures of offset distribution. So what is taking place here? The market creates a high, retraces lower down into some measure of discount array, and then moves higher with an expansion swing to take out that initial high. And it does that then several times to drive out the liquidity out of the market. That's what we see here take place 3 times. And then the market eventually retraces back down and consolidates, like I stated. This is pretty typical characteristic of once the market takes out a all-time high, just to create these little drives higher to take out further liquidity. Yeah, that's gonna be it. I talked way too fast, and I should probably be a little bit more. I should give a little bit more projection to my voice, but we will work on that, I guess. But it's good to be back in the rhythm. That's gonna be it. All right.